Take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to spread the word about how BTA analyze the market, how we look at the market. This is Rod from BTA, and we are known as the middle traders. We are not going to get in at the exact bottom, and we are not going to get out at the exact top, but we will make a lot of money in the middle. Okay, this is going to be our weekly walk with the markets. Our weekly walk with the market. You know we got to walk with the market. We got to stay in step with the market. We got to stay in tune. We know that 75% of all stocks are going to follow the major market indexes. If they're going up, 75% of all stocks are going to go up. If they're going down, 75% of all stocks are going to go down. So you got to stay in step with the major market indexes. Stay in tune. Walk with it. So this is how we do it. Every weekend, we we do this, okay? And this is a part of it. So we're going to start out with the Dow Jones Industrial Average. This is the actual index itself, okay? This is the actual index itself. This is a daily chart of the Dow Jones. And as you can see, we have these overhead trend lines where prices have been stalling at these trend lines for the last 2 days, okay? First, we got above this fractal right here. Okay, this horizontal overhead resistance level at 31,255. And we got above this week this downward trending internal trend line right here. Prices got above that 3 days ago and stayed above it. And then for the last 2 days, it's been holding above this overhead resistance level right here, okay, which is at 31,255. But it's this downward trend line right here going across the previous high, the high fractal right here, okay? That's where we stalled at on Thursday. Friday, we got above it, and we pulled back and closed right on it, almost to the penny, okay? So I'm telling you, don't let anybody tell you these trend lines don't mean anything. Okay, because how many times have you heard me say almost to the penny? It don't mean anything to them because they don't know how to draw them. They don't know how to draw them. Go back and look at all the videos we have on BrownTradingAcademy.com. Go into the videos, the previous videos, webinars, and you're going to see I showed y'all how to draw these things. I'm telling you, look how many times we say it almost stopped to the penny. Look how it stopped right on it on Thursday. Friday, it got above it. Well, why did it stop right on it to the penny on Friday? Okay, why did it keep stopping to the penny? Well, listen, I'm a believer, okay? I'm a believer. And all I ask you to do is keep watching. Don't believe me. Men lie, women lie. Numbers and the charts don't. This trend line right here is where we stalled at for the last 2 days. And then we have this upward trending trend line right here, internal, upward trending trend line, going all the way back to the March 2020 lows, okay, across this fractal. Well, we pull right back to that. If you see right now, that's where we at. We at this downward trending trend line and this upward trending trend line. We're caught right there and holding support at 31,255. If we could bounce off all this, all right, and hold support on all of this, then maybe it can go up, and the next area interest will be like 32,000. That's this overhead resistance area right here. This horizontal line overhead resistance area right here at 32,000. So we got to hold the 31,255 in these internal trend lines as support. And the next area interest for the Dow Jones will be around the 32,000. But you know, you know we got to watch out for the key moving averages. This is just a structural chart. We're going to go into the moving average. Now let's take a look at the Standard & Poor's 500, the actual index itself. All right, well, we held support at this internal trend line. We held it. Okay, you see this internal trend line right here? Going all the way back to the March 2020 lows, going across these fractals. Well, we held that. We closed right at it almost, all right? And we need to hold that as support. We got above it. We got above it. It was acting as resistance. We got above it just a little bit, and now we're just trading above it. We need to hold it as support. If we break below that, and we can't stay above this, and we break below that, and we start coming back down, then you know that this red horizontal support level, that's the 3,810 level. Basically the 3,800 level that we've been talking about, okay? That's where I took a couple of nibbles at it to the short side, right? But 3,800 been a strong support level, all right? So let's see if it can hold, okay, this here internal trend line right now. We have an overhead resistance area right here. This overhead resistance area right here, it's a daily level at 3,945. We had 3,899. Okay, so if we hold the support at this internal trend line and we trade up, well, then we got to look for this horizontal overhead resistance level at 3,945. And then we got a weekly horizontal overhead resistance level right here, the red line, which is at 3,933. It is a lot of overhead resistance for the Standard & Poor's, y'all. We got a lot of structural resistance area. We got this downward trending trend line right here. We got this upward trending internal trend line right here. Okay, they're all coming together at this point. You can see it. Okay, you got it all coming together at this point. And then we got the horizontal overhead resistance level right there at 3,983. So our overhead horizontal resistance level 3,983. And then we got the first overhead resistance level, which is this yellow line, okay, which is at 3,945. So you got 3,945. Then you got internal trend lines from coming upward trending internal trend line and a downward trending internal trend line. And then you got the 390.83. So let's just go over that one more time. I know that could be a little confusing. First, right now, prices is holding this overhead, this internal trend line coming from the low. So upward trend internal trend line coming from low. Price is holding that for the last 2 days. It closed today at 3,899. If it is to hold this support at this upward trending internal trend line and it doesn't break down, if it does break down, we're looking for the 3,800 level. But if it holds support and moves up, then now you got the first thing you got is this horizontal yellow line here, which is at 3,945 right here. You get above that, then you got these two internal trend lines. One right here coming across here, internal trend line, and you got a downward trend internal trend line. They're coming together right here in the middle, right above the 3,945. And then the next thing you got is the next overhead resistance, which is a weekly level, the red line, which is a weekly level, which is 3,983. So right here at this point, if you look at the Standard & Poor's, right here at this point, right here, you got a lot of things coming together. That's called confluence. You got a lot of things coming together right in between the 3,945 level and the 3,983 level. Right there, you got a lot coming together. I hope you're picking up the jewels that I'm dropping. You got daily and weekly resistance levels there. You got upward trending and downward trending internal trend lines coming together there. It is a lot coming together right at the 3,945 and the 3,900, in between the 3,983 and the 3,945 level. Right in between those two levels, it's a lot going on. Be careful. I hope you're picking up what the jewels that I'm dropping. Now, let's look at the Nasdaq Composite. This has been the actual index itself. This is a daily chart of the Nasdaq Composite. This index has been performing the strongest right now, okay, over the last week. This index has been performing the strongest. Well, a lot of the technology stocks, high growth stocks, they're starting to perform for whatever reason. Now, but it's rallying. You got a relief rally, a rebound rally, whatever you want to call it, on low volume, but it is running. Okay, be careful. It's coming into some strong overhead resistance as far as moving averages are concerned. Go back and look at the videos we put up yesterday. Look at the next couple of videos we're going to be doing today and over the weekend. You'll see it. But for right now, the NASDAQ has gotten above both of these internal trend lines here. You see these two internal trend lines coming back from the March 2020 lows. It's gotten above both of those on Thursday and Friday. And it got above this horizontal overhead resistance level at 11,424, okay, for Thursday and Friday. Right now, we at a key level, this overhead resistance level right here, which is 11,667. That is also a previous fractal, a previous high. So now we got a high, a lower high, and if we break above this, that's a higher high. Okay, that's saying that the trend may be changing. Okay, because you got a low, a high. We got a high rather, a low. Then we get a higher high. If we come back and make a lower low, then the trend may be changing. A higher low rather, I'm sorry. Let me repeat that. I apologize. We got a high. Then we made a low, a higher low. You see that? Now, if we go up and break above this high, that'll be a higher high, right? And then on the next pullback, if we go above this high right here, that'll be a higher high, right? On the next pullback, if we stay above this low and then start rallying, that'll be a lower low. Well, right there, then the trend will be changing. Now we'll be in a more constructive uptrend according to the chart structure. Well, that's a lot to be seen for right now because, first of all, we got to get above this fractal. We stalled there for the last 2 days. It's possible to get above it next week. But if we get rejected here and we start breaking down, first thing we want to look at is this here area here, which was prior resistance, and then it'll be acting as support at 11,424. It break that. Watch this internal trend line. It break that. Break this internal trend line also, the second one, the lower one. Then look out. It might come back down to 11,000 level. Well, that's the downside. Okay, but it could break above this and keep going. But if it does that, the first thing I'll be looking at is this next overhead long-term weekly level, which is at 11,946. So if we get above this first resistance level right here, where we stalled for the last 2 days at 11,667, we break above that and we hold support there. The next area of interest for me will be 11,946. That's a long-term weekly resistance level. And not only that, when we got there the last time, you see we consolidated. All right, right before we drop. So if we break above this here, hold this support, this resistance, and hold it as support and break above it, you got this next overhead resistance level right here. Okay, the long-term weekly level at 11,946. And don't forget, right there, you got a lot of consolidation here. You see where prices move sideways right there? A lot of consolidation. You could go in here and get a consolidation and it could get rejected. I'm telling you, look, you see what happened last time it got in here, got above this long-term weekly resistance level, it collapsed. I'm not saying it's going to happen again. First of all, they got to get above the first couple of resistance levels right here. I'm not saying it's going to happen again. I'm just telling you that this chart, even though we got 4 days of upward movement here on very low volume, we climbed up a little bit. I'm telling you, this chart is not out of the water yet. This chart is not out of the water yet. We are middle traders. We are not trying to get in at the exact bottom. We're trying to get the safest, most highest probability trade that we can get. The Nasdaq is the strongest right now as far as price movement is concerned, but it's coming upon some very key overhead resistance levels. be careful. Okay, be very careful. All right, be extremely careful. Let's look at the key moving averages. All right, so here we're gonna start out with the Dow Jones itself. Well, you see, we had our follow through day, right? You remember that we talk about that all the time. We undercut the low of the follow through day, but the rally is still intact because we never undercut the low of the first day rally attempt. So the rally is still intact. The follow through day is still intact. We're still in the rally attempt. Okay, but look at this chart right now. We just got above for the last 2 days. Only 2 days. Only 2 days have we been above the 21-day moving average. Only 2 days. Okay. For the most part, we've been below the 21-day moving average. Only 2 days above it. Okay. But the problem here is that we got this downward trending 50-day moving average that's right overhead. You see what this downward trending 50-day moving average did last time? Prices consolidated. It got caught between the 21 and the 50-day, and it collapsed. Okay, the 50-day moving average is a really strong overhead resistance level. This is the Dow Jones Industrial Average, the actual index itself. Okay, and look at the last 3 days. Okay, the last 3 days of trading, it's been going up, but look at the volume, y'all. A rebound rally on low volume. Be careful. That is one of our forms of weakness. Distribution, breaking the key moving averages, gap down days, churning, new highs on low volume, rebound rallies on low volume, relative strength line trending down, late stage basis. Those are our forms of weakness. Go back to the videos on the browntradingacademy.com. I know it's a lot of work. But if you want to master this thing, you got to put the work in. I know it's a lot of work, y'all. It's not easy. But you can't make a lot of money easy. I told you from day one, there is no get rich quick scheme in the stock market. There is none in the world, in life, in general. You got to put the work in. I know it's hard, but go back and look at this stuff. Study this stuff. Look at the study cards that we got on the website. Everything is there. All you got to do is put the effort in. And it's for less than $1 a day. It's worth it to know how to move your money. Okay. Here. This is the Standard & Poor's 500. The actual index itself, the daily chart. For the last 2 days, we've been above this downward trending 21-day moving average. Okay? Look, this downward trending 50-day moving average is the problem. Okay? The downward trending 50-day moving average is a problem. Now, we did get a bronze cross. All right? Where the 9-day, this green line, the 9-day moving average crossed above the yellow, the 21-day moving average. We did get a bronze cross. The problem with this here bronze cross a little bit, though, is that the yellow moving average, which is 21-day and the 9-day, are both pointing down a little bit. The 9-day was going up, but now it's turning sideways. The 21-day moving average is pointing straight down. But that is a bronze cross, and that is a strong early indication of momentum coming into the stock early. Okay? So that is a bronze cross. But you got a downward trending 21-day. We only been above it for 2 days. But this overhead downward trending 50-day moving average is what you got to look out for. And what else you got to look out for? The form of weakness that is showing up here. Okay? You rallying, a rebound rally. We had the follow through day. First day rally attempt, follow through day. We're trying to get a new rally attempt, right? It happened. We got a follow through day. We're in a rally, confirmed uptrend. This rally is under pressure now. It's trying to get back on the right foot because it's trying to rebound rally. It's trying to rally back up. But it's doing that on low volume. It's a form of weakness. How many times have we discussed this in the past? I'll never forget that Santa Claus rally garbage that they was talking about in 2021 going into 2022. Oh, we're going to have a Santa Claus rally. I told y'all that Santa Claus rally garbage, Yes, it was rallying, but on low volume. There was no participation. Shortly after that, the thing collapsed. I'm not saying it's going to work every time like that, but I'm just telling you, these are warning signs. These are warning signs, y'all. Forms of weakness. Please go back and study them. Rebound rally, low volume. This volume is going down while prices are going up. That's a clear divergence. It's a form of weakness. Be careful. That's the Standard & Poor's. Let's take a look at the Nasdaq. Okay, here's the Nasdaq, the strongest of the right now as far as price movement of the major market indexes. This is the Nasdaq, daily chart of Nasdaq, the actual index itself. And what are we seeing? Look, we did get we didn't get the bronze cross on the Nasdaq. That's interesting. The 9-day did not cross above the 21-day on the Nasdaq. That's very interesting. There's some interesting things on the Nasdaq, even with our differential chart, which we're going to get to in part 2. But you see this here, the 9-day moving average did not cross above the 21. So we did not get a bronze cross, and I'm shocked that it didn't really, because it has been moving. The price action has been moving up. It's been the strongest. Okay, but look at that. We got close to it. The 9 got close to the 21-day, almost crossed it, and it kind of pulled back a little bit. Make you want to say, right? But the main thing on this thing is this downward trending 50-day moving average that's right overhead. Once again, we got above the 21-day for 2 days. Well, 3 days we closed above the 21-day for 3 days. We closed above it. But now we're stuck again between this upward to sideways 21-day moving average and the downward 50-day. We're stuck there again. We've seen this picture before. Sometimes it doesn't turn out to be that great. Okay, and you just seen it recently. You had a downward trend in the sideways 21-day moving average. You had a downward trend in 50-day. Prices consolidated right in here, and then it collapsed. We have seen this before. Downward trend in 21-day moving average, downward trend in 50-day moving average. Prices consolidated in between the two of them, fell off. All right, now you got a downward trend into a slightly upward trend in 21-day moving average. I give that much to it. But you still got this downward trend in overhead 50-day. Prices are inside of it again. Is it going to fall? Well, with the prices moving up, prices are moving up, but the volume is lower. It's not even above average volume. Not one time, not one day since this rebound rally has started have you seen above average volume. Not one day since this rebound rally has started have you seen accumulation. Well, I'm wrong. You got 1 day of accumulation right here. An up day with higher volume than the previous day. That's 1 day. You got one right here. The rest of them, no good. But since the follow-through day, right? We got the first day rally attempt right here, and then this follow-through day is right here and here. This here should be over here, okay? Because I expanded it, so it kind of moved out of. It's supposed to be over here. That's the follow-through day, right? Okay. But since the follow-through day, and then we had the verified follow-through day. This is the unverified, then we had the verified. So we had 2 follow-through days kind of back to back. Since that happened, right? Okay. You got 1 day of accumulation. But look, distribution right there. And on above average volume. How many above average volume days you seen in the green? Not one. You see 3 above average volume days when the prices are going down. Not only that, you got 2 days of distribution since the follow-through day. And I told you, anytime you get distribution within 2 to 3 days after follow-through day, right there, the rally has a 50% chance of failing. And anytime you break below the low of the follow-through day, it kicks it up to a 70, 80, 90% chance of failing. So the rally has a really good chance of failing, and it's coming upon a very strong overhead resistance area at the 50-day moving average, right? You've seen the structural chart. Go back and write down the level of the numbers on the structural charts. You've seen it, okay? And you got this downward trending overhead 50-day moving average that's right overhead, and you got a rally attempt on low volume. Well, be careful. That's all I'm trying to say. Look, y'all know this is not financial advice. But wouldn't it be wonderful if it was? But it's not. But if it was, you would not lose a lot of money. Okay, but it's not. But look at here. This is the IWM, the ETF that tracks the Russell 2000. Well, for the last 2 days, we've gotten above this downward trend into sideways looking 21-day moving average. But look at this overhead 50-day moving average right overhead. The volume is not hitting the ball out the park. I think you get the picture. Listen, be careful. This is a rally, but it's looking mighty weak to me. Okay? We're in a rally attempt, but it's looking mighty weak to me. Okay? Let's finish this thing off real quick, looking at the guppies. Well, you see it already. The magenta line of closing prices, this is the Dow Jones Industrial Average, daily chart of it. The magenta line of closing prices has gotten above the faster, shorter-term green moving averages. But you see the downward trending red, longer-term moving averages? The magenta line of closing prices got to get above that, right? No need to get too excited if you can't get above these downward trending longer-term moving averages, where you know every time you got to those downward trending longer-term moving averages, prices have failed in this bear market. We are still in a bear market, y'all. Okay, this is the Standard & Poor's 500, the actual index itself. Look at the magenta line of closing prices. Yes, it has gotten above the faster, shorter-term green moving averages, but here it is going right at the longer-term red moving averages. Every time we have gotten into this area before in the past, in this bear market, it has gotten rejected. Here's the Nasdaq, okay? The magenta line of closing prices are right inside of the longer, faster term, The magenta line of closing prices are right inside of the longer term, slower moving averages, the red line. The red moving averages are our longer term, slower moving averages. Yes, the Nasdaq has gotten above the shorter term, faster green moving averages, and they are kind of squeezing and turning up and trying to flare out a little bit. But we've seen that picture before. The problem is every time it has gotten into the longer term red moving averages for any of these indexes, okay, during this bear market, it has gotten rejected. Every time the magenta line of closing prices get inside of these longer term red, slower moving averages, it has gotten rejected during this bear market. We're there now testing these red moving averages again. For the Nasdaq, we're right inside of them, almost in the middle of the red. The last time we got there and tried to get to this point, it got rejected and it failed in this bear market. The magenta line of closing prices has to get above those longer, shorter term red moving averages before I can even get that excited for sure. Right now, the guppy is telling you that the trend is still down. The trend is still down. See you in the next video.